What's up guys, and welcome to today's video. I'm just going to talk about 5 investments that I did over the past week and just generally talk about them. None of them are massive spec stocks. None of them are the hottest stocks on the world. These are just 5 stocks that I picked up over the week and I thought I'd just make a quick video on it. Anyway guys, let's get into the video. So guys, let's get on with number 1. So first of all, we have VanEck video game ETF, and I guess for me, this is one of those industries which I see has a tremendous amount of growth. And this was really an ETF which covers all the main video game companies, and it also includes a few ones which specialize in basically mobile gaming. And mobile gaming is absolutely huge. It currently is half of the video games market, and it's also absolutely blown up in China. It's just astronomically high. So the holdings in this we can see is Tencent, which is a massive Chinese internet company. So it's basically the rival to Facebook over there, but it has a lot of fingers in many pies in terms of video games. Also in this ETF, you've got AMD and Nvidia. So these are 2 really kind of accelerated growth stocks. And I mean, Nvidia was in it predominantly for when it made video cards, but I think the stock itself is more evolving into more of a data center stock, and kind of AMD is taking on some of that CPU stuff from Intel recently. But yeah, you can see the classic kind of video game companies here. So you've got Nintendo, your boy here, Mr. Mario, Activision, Blizzard, EA, NetEase, Take-Two, so that's your Rockstar, so your GTAs and Red Dead Redemption. But I mean, if we look here, so video game industry and its revenue shift. So the video game industry is growing so fast that some believe it will reach 300 billion by 2025. And I mean, it's currently at just over I think 150 billion, so that's doubling in the space of 5 years as an industry, which I think has got which I just think is exponentially growth and really good. And also, because I am interested in video games, it makes tracking the stocks for it a lot easier, because I'm a lot more up to date in terms of understanding how the companies are performing. And it's like one of those things that Warren Buffett says is, don't invest in this stock that you don't understand, or understand the company first before you invest in the stock. Don't look at the numbers. I think that's quite easy for me on this one. And I mean, there's some really kind of free to play models and monetization that's really cracked in over the years, that's making games probably a lot more exploitable. So the one example they've got down here where Fortnite is bringing in basically billions of dollars a year. So basically 2.4 billion revenue for Fortnite. Over 1 billion was generated through in-game sales of items. So free-to-play game, you make it super accessible to all, but then you charge them for clothing, skins and things like that. And that's where they can get so much money from, especially like kids and things, stealing mums and dads' credit cards and making loads of dough. But yeah, that's the first one. On a different note, so I bought essentially iShares' global clean energy ETF. So I am a massive fan of, or I believe the future is in renewable energies in terms of the social changes that have happened over the years have been massive, especially kind of if we look over the last 2 to 3 years. There's been a real drive for companies to move towards what is essentially, have corporate social responsibility plans in place, but also them taking it more seriously. I think you had a lot of companies in the early 2000s who said they were on board with it, but didn't really try, or weren't really committed to the cause. I think this year it feels like a lot more kind of pressure from governments to do something on this. So You've got the UK has a carbon net zero plan in place. And what this ETF essentially is tracking, it's tracking some of the largest kind of companies which produce solar, wind, and then the technology behind those renewable energies, all in an ETF which is kind of packaged up. And I mean, this is really interesting. If we look here, this chart really says it all to me, where it started in the early kind of a decade ago. So started around just before 2009, and the fund really had trouble starting. So if we look here, you would have lost money on the initial £10,000 investment because it almost went backwards in terms of value. But recently it's had a massive resurgence, and as we can see, it's up 23% this year, and it's almost reaching back to new time highs, I guess, of $10 a share. So I bought some here, and I think this is something that's more of a long-term play for me. I think this is something that I want to get into as an investor anyway. But yeah, it's got some really good things in here. So it's got solar companies here. Siemens is massive in terms of wind renewables. So it's got wind and solar, which is really important. And I think this is also important, like adding in the geography diversity into your portfolio is really key. But yeah, so this is, of course, I'll accept the cookie. But yeah, so they just did a BP Statistical Review of World Energy 2020, and this has come out saying that renewable energies over the past decade have basically quadrupled in terms of the amount of energy produced by renewable energy. And it's nowhere near enough, because I think the power consumption of the world has gone up tenfold. So if we quadruple renewable energy, it's still not enough, it's still not meeting it. But I think it's just something to, as we can see here, the consumption from renewables is absolutely skyrocketing, and it's going up exponentially, which means that these companies that are providing this service are probably going to be better utilized going forward. And I mean, a lot of the companies in the ETF are wind and solar focused, which is great, makes up the biggest part of renewables. So wind at 51% and solar at 26% here. And I mean, like here we can see like some of the country breakdowns in terms of who is utilizing global energy and renewables well. And there's kind of like a top spot between China and the US, where the US is using more, but its growth has slowed astronomically. So China's got a growth rate of using renewables at basically 33% versus the 10% from the US. So the US is almost slowing down a little. But yeah, I think really promising. But it's just, can the renewables keep up with what is the growing consumption of the human race? And this is why I think obviously like nuclear plants are so important, because they can just put out so much wattage. Also, Chernobyl, what an amazing series. That was one of my lockdown things. Cool, yeah, so number 3 is Lloyds. So basically Lloyds is a long-term play for me. I think it hasn't fared very well. Let's look at the 6 months for Lloyds. So we were up at edging close to 60 pence a share, and then we've been on a steady trickle down, and it's really been battered. And I think a lot of the banks around the world, so you just had HSBC's earnings today. Lloyds has been absolutely battered. So I already had a position in at only like 29 pence, so I bought in, I think, somewhere around here. Yep, somewhere around here. And then I just bought a few more shares in the dip, so to kind of like lower my average price per share, but also I think Lloyds is a long-term play, and one of the things I've been thinking about recently, and I don't know if any other investors are thinking about this, is that eventually the governments will try and re-establish some kind of control in the the fiscal policies or the monetary policies by using interest rates. And the interest rates are one of the main sources of incomes for banks. And Lloyds currently, with 0% interest rates, Lloyds being the UK's largest mortgage broker isn't making any interest money off its mortgages it's kind of lent out. So I think in the years to come, we might see a kind of a steady retreat back to the 60p. So, I could be up 100%, that'd be lovely. But also there's a longer term play is if the interest rates go up, I think the ability for banks to kind of generate money will go up, increase. And I mean, like, if we look at the maximum for Lloyds, some shares were at like £7 a share. Oh, God, I love that. From 30p to £7 a share. Nice. That'd be lovely. But as I've said, it's going through a really terrible time at the moment with everything going on, and it's put aside £2.4 billion in case of the defaults on loans. So basically, they are predicting a really bad economic situation where a lot of people can't repay their mortgages, and that's a really bad sign to see. And then where it says here, the bank shares price tumbled more than 7% on Thursday. As soon as that happened, I was like, ooh, let's get in. So I picked up a few more there. Right, guys, on to the fourth one I picked up. So I made a video about Legal & General on my channel and did kind of analysis of why I think it's a really good company, but I finally got a position in Legal & General at a price I thought was good, so I picked it up at here, so just £2.10 kind of range. And yeah, it was really, I think it was at the right price for me to get in. But I truly believe it's a great company for kind of a dividends and long-term holding. So I put down a substantial kind of sum for me. So kind of made a position in my own portfolio about this. But yeah, great share. Watch the video. I'll link it in the description. And that was the final share I bought. So guys, and number 5. So the 5th thing I invested in last week was a chair. And I cannot express to you how important it is to invest in yourself. That is so important. And I have been sitting on what I can only describe as a kitchen stool for the last 4 months during this whole lockdown, and my back has been breaking every day. It's been so painful, and investing in a chair and sitting comfortably at the desk has been so nice today. So that's the 5th thing I invested in last week. But definitely invest in yourselves. So guys, that was 4 stocks, 1 chair. Sounds like a terrible name for a movie. So that's this week's video. This week I will be looking at some IPOs that are coming out. There is an IPO around Rackspace, which looks pretty interesting, which is around cloud integration and kind of cloud migration services, which looks pretty interesting. But yeah, that's all this week. I'm also kind of trying to figure out how much cash to keep in my reserve portfolio, because I do still think the market is acting really strange and I can't figure out if it is recovering or if we're all just deluded. If anybody knows, let me know in the comments down below, because I don't know either. But anyway guys, hope you enjoyed this video. It's a bit different. I will be doing back to analysis stuff later on, but yeah, if you did like it, please smash the like and have an amazing day. Catch you later.